All right, everybody. Welcome to Top Trades Live. I'm here with Enrique, who
Oh,
is a
screen.
rainbow now. That's
Yeah,
kind of
let's see. There we go.
all right. Avoiding tech disasters today. I like it. I just, I get
narrowly,
I get
narrowly avoiding tech
I get
disasters.
I get booted from the internet 2 minutes before we're supposed to start. Okay. Stocks are creeping off their lows this morning. But not before we get some fun geopolitical news. While we were sleeping last night. I think that's going to be the top of mind stuff that everybody's talking about today, that everybody wants to know about. Uh, we have the Trump honeymoon possibly being over. We have Ukraine and Russia nonsense, Putin talking nukes. What do you make of all this stuff that's happening out there in the market right now, Enrique?
Well, there's a funny theory that we espouse that I think is kind of counterintuitive to a lot of people, which is that short term moves in the stock market are much more about positioning than they are the news, so to say. And the news actually backfills the stock price. So, what I'd say is going into last week, we were quite extended. Everything had a run. RSIs were really high. We were very far from the moving averages and all of that. And it's sort of like if you've been partying too much, you get the hangover, or if you've been running too long, you got to sit down. And there was the healthy and unhealthy version of that, right? And so I think what's happening now with the market is that we're seeing sort of that pause that had to happen. Now, it's happening in a bunch of sectors, which we're going to talk about today, because some of the cabinet appointments, it's happening because whatever Putin, and we can talk about that in more detail, signed this morning, but it's kind of not. It's like I sort of feel what's happening to the market here and what's happening to some sectors and stocks, it was going to happen no matter what. It's just a question of what was happening in the news at the same time that we were then going to blame on it. But this is, sorry to start with a big concept. This is a super important concept to understand because it's sort of like unplugging from the matrix. Once you understand that it's about the price, remember, price equals truth, and the potential, and stop focusing on the news, it's going to be like you just open the window and you can see everything in front of you, and all of a sudden trading becomes a lot easier, and you're going to do a lot better. So, yeah, some stuff happened. I don't know that it really mattered. The market needed to take a break, and it's taken that break.
Right. I like to say, like, everybody was looking for an excuse to sell, and they got one. They got a headline excuse to sell and justify whatever their short-term actions happen to be. And that's all it is. And that's usually all it is for the most part.
In the
But we
short term, I
Oh yeah,
think it's
sure.
it's yeah, yeah.
Sure. And we have a situation now where I think that everybody realizes that a lot of these bigger tech stocks have been underperforming, and they continue to underperform, and we're kind of getting to a point where, are they going to play ball the rest of the year? And I mean, I don't want to be dramatic about it or hinge it on any particular event, but it feels like everybody's eyes are on these Nvidia earnings coming up Wednesday night, and they're going
Yeah.
to hang their hopes and dreams on that number that comes on the tape.
So someone was asking me, he asked me, he goes, "Oh, what do you think of the Nvidia number? They're going to blow the number out. What does it mean? Do you think the stock will be up? Do you think that it'll impact the market?" And I said, "Well, tell me where the stock is going into the print, and tell me where the market is going into the print. Because if both of them are super extended, then meaning are up a ton, I don't really care what they print, how big they beat the number. It's probably not going to do very much. But if both of them are getting punished, into the print, well, then they beat and it does real well. The funny thing is, we're right in the middle. I'm going to tell you one thing Yeah, so you can see here, it's kind of neither that extended nor that. What moving average do you have on there? You got
That's
the 200
the
day.
200 day. Yeah.
Okay, got it. So, it's above the 50 and 100 day. We're a little extended, but I'm going to tell you something that you said about tech stocks, which I think is actually going to surprise you. Pull up the chart of MAGs.
Of what?
MAGs,
Oh,
MAGS.
yes. Yes, the
This is
mag.
the
Yes.
MAG 7. It's coming off an all-time high.
Yeah.
So, the funny thing with MAGs, this is crazy, is we talk about the strength of this bull market. And in the first half of the year, it was all about tech. And it was really all about what I call the sexy six, right? Because Tesla wasn't even doing anything.
Right.
And then everyone's like, oh, the market's going to crash because it's all about tech. It's all about the MAG 7/sexy six. And what happened? Well, we broadened out majorly. And since then, we've been led by financials and, drum roll, please, in the last couple of weeks, energy, which really broadened the market out. MAGS has done a mini version of that because we've seen Google struggle. We've seen Microsoft struggle. But you know what the best performing component of MAGS is in the last 3 weeks? That's powered this index to new highs. Take a guess.
I don't know. What is it?
Tesla. It's actually pulling MAGs up with it. So, this is the other thing. I talk about the news backfilling the liquidity. The markets are driven by liquidity. We're in a bull market. We're in the heart of a bull market. We're going to talk about what could happen, what could go wrong here in just a little bit. But we're in the heart of a bull market. What happens is the bull market rotates. And so while the rest of MAGs, NVIDIA's near a high, but while the rest of MAGs has struggled or big components are, meanwhile, Tesla's just gone up 50% in a straight line. But this is what bull markets do. It's the same way that when you're in a bear market, no matter what you do, it feels like you slip on a banana. Right? It's like there's no way to win in a bear market. A company reports a great number and there's something to criticize and the stock trades down 20%. In a bull market, you're in the opposite of that. And I think we're seeing it with what happened to the overall market back in July and what's happening with MAGs right now. So tech hasn't really struggled. A couple things in tech have struggled and some semiconductor names have struggled, but tech overall is doing pretty good. Take a look at the QQQ.
Yeah.
Or what I would actually do, I prefer the composite, the NASDAQ composite, because it's a broader index. The NASDAQ composite was at an all-time high 4 days ago. So that's not tech struggling to me. That's seeing rotations and some stuff that people are focused on is struggling.
Yeah, it's amazing how quickly short-term sentiment switched late last week. We had this booming rally off of the election, and everybody's throwing confetti around, buying everything in sight. And then Thursday, Friday, it starts to slip a little bit, and people immediately flip bearish and say it's over. This is all we're going to get. And I think a lot of that might have to do with, biotechs got crushed with the RFK Jr. And that's an ugly chart. That's neither here nor there. But I feel like there was some worry that crept in, saying, okay, what other wild cards are we going to get here in the next couple of weeks? And maybe that spooked some people and made them a little more bearish than they should have been.
But the problem is they were too bullish. It's like that's the whole thing, is that these things happen. And I want to talk about RFK Jr. because I think, the funny thing is, and I've said this, I think in some of the notes, coming out of the election, everything went up. And it was kind of like everything's a winner. And beginning last week with some of these cabinet appointments, some stuff started getting crushed. But, these short-term reactions are almost always wrong. And I think, believe it or not, and I think I said this to you in a note, that the cabinet appointments are setting up some of the best buying opportunities I've seen since August 5th. August 5th was that day with the crazy yen carry trade flurry. Does anyone remember that? The yen carry trade? We haven't heard that in a little bit, huh? So, but again, I just think it was about the potential. But should we talk about the Putin thing? What I think is going on here?
Yeah,
real quick?
Absolutely.
Well, the devil's in the details, right? You saw the headlines that said Biden said, "Oh, they can fire missiles into Russia." That's actually not what they said. They said they could fire missiles into Kursk, which is that one small area of Russia that the Ukrainians took. And then they just said that Putin signed this nuclear thing. Well, yeah, that's what he signed, but it actually just means that they can potentially respond to nuclear powers that enable other people. He didn't specify that they would respond with nuclear. But what I think is really going on here, and this is actually kind of my thesis of what's going to happen here, Trump is going to shake things up. And I wrote this in the note that you're going to post a little bit later. So maybe I'm jumping the gun here, but for our trade desk subscribers, Trump's going to shake things up. And I think in a great way. And I love his style. He is a great negotiator. He is a great deal maker, but you make great deals when you have leverage, and you get leverage by two things: carrot and stick. And what Trump did very well in foreign policy was his stick was unpredictability, and he made people very uncomfortable. He made the Iranians uncomfortable. He made the Russians uncomfortable. He made the Chinese uncomfortable. That was the goal. That was the point. And so I think what we're seeing now is I do think he's going to have potential success, getting this conflict in the Ukraine to dial down. But I think it's going to be coming from a dialed up spot where they need to create leverage. And I think that's what's happening right now. So my point is, and Dan Amos of Paradigm said this, make volatility great again. I think what we're going to begin to see are these flurries of sort of geopolitical instability, things like RFK, things like this Putin thing. These are going to begin to inject themselves in the market, and they're going to be part of the Trump process. But the great thing, and this I'm super excited, they generate awesome trading opportunities, because I think what's going to happen is whenever you shake things up like that, people get emotional. You're going to find some stocks that you can buy and just, fade the overreaction, buy the stock, and make really, really nice double-digit returns in a couple of weeks or a couple months.
Well, speaking of which, do you think that we're seeing one of those situations playing out right now in the biotech space, in this hard reset we've gotten in biotechs?
Absolutely. There's no doubt about it. Look, let's go through RFK. We'll go through it in pieces. Number one, he's been nominated. He's not been confirmed. Now, Kalshi has him at 76%, which is actually higher than I would have thought. But so it seems like the betting markets, which have been pretty good, haven't getting confirmed. So let's take that. So but again, it hasn't happened. Number two is he's not going to be confirmed for months and months. He's not going to do anything for even longer. So what I find with stocks in these situations is when they get exceptionally oversold off the back of a reaction, even if the reaction is right eventually, those oversold situations unwind themselves in the near term. So I don't care if RFK is going to eliminate all of biotech in 12 months. I think the XBI, which just went from 105 to 90 in a straight line off an all-time, is that an all-time high on the XBI where it was? I know it was a recent high. Yeah. No, the all-time high is way back.
Yeah, that's way back here. Yeah.
It's one of these trades that looks like Roblox or something like that.
Yeah.
But anyways, I kind of don't care whether RFK is going to completely change the world for biotech, because he ain't changing it in the next 30 days. He ain't changing it in the next 60 days. He ain't changing it in the next 120 days. So to me, XBI is a buy. The final piece, there's a real debate about how much he can change, how much is going to be changed, et cetera. Look, I think he's got some valid points, but many of his ideas are outside of the scientific mainstream. And for the most part, I think science is right. I don't agree with everything that the claims that are made. But again, I don't care. As a trader, you buy the XBI here. I think that's a no-brainer.
Yeah, I mean, even a partial snapback here is going to give you really nice fast gains once this thing catches, and it seems to be catching the last couple of days. It doesn't want to drop below. You have a nice little former lows to work with here from August. I mean, the risk reward is there for the taking in a trade like this. Even if you just get a little bit of mean reversion and it chops along here $100, you're set up for a nice gain right there.
I'm telling you, political events, these kinds of political events, and this is why I'm actually excited for the next, or one of the reasons I'm excited for the next 90, 120 days, is the market always gets it wrong. And again, I don't care about like if in a year it's true, because I'm not trading for a year. I'm trading for the next 90 days. And I think this is a layup.
Yeah, and speaking of the trades that I think they're going to move in the next 90 days, you've talked a lot about your echo trade thesis, and you're seeing those plays begin to set up. I still feel like, these overreactions we had the past couple days, Thursday, Friday, heading into the weekend, and now we're starting to see, even earlier this morning, a lot of those tech growth bases look like they're bottoming out again and beginning to push higher and starting to outperform. Stocks in the payment space are moving. I put on a new trade in Square today. That thing is
Yep, I
ripping
love
higher.
that trade.
Yeah,
Yep.
and it seems like everything ARC is starting to move in the right direction again. What are some of your favorites that you're looking at in this area right here? Because it looks like we had the big overreaction, then the reset, and now we're starting to climb again. It looks like these are going to be the names that we want to be playing from a momentum standpoint.
Well, let's before I move on to ARC, but let's just go back to XBI. You said it. XBI is an echo trade. XBI is, it's funny that you bring up ARC and we brought up XBI. If you wanted to create an index for echo trades, these are the two best indices. ARC's not an index, it's a fund.
Right.
But XBI is an ETF that is essentially the physical manifestation of the echo trade. Now, let me explain what that means and what I'm saying here. When biotech went to 180, 175 back in 2021, it did so not just completely on fumes. It did it because biotechnology is awesome. We have seen massive innovations. People think of biotech and they think a lot of the bio, they don't think of the technology. There have been basically three ways you've made money, 10 baggers, 20 baggers in the stock market in the last, 20, 30 years. Number three is actually if you find great retail concepts, things like Kava, Chipotle, etc. It could be a retailer, it could be a restaurant. Number one is obviously technology we know about, but number two is biotechnology. It sits right there in the middle. So the reason why XBI went to 175 is because it's true. This is there are innovations coming out of these companies that are going to change human history. It's happening already. Now, it got ahead of itself and it came back down. A bunch of companies actually went out of business because, the thing about biotech is it's very binary. And now, though, as things have settled in, you're beginning to see those results and that promise play through. So biotech itself and XBI is a perfect, manifestation of the echo trade. And so, and now we've got a great bite at it. And so to go over to ARC, what you were saying there, look, I think Kathy Woods, who runs ARC, she buys kind of what I'm saying. I guarantee you, if I sat down with Kathy, I said, Kathy, what's the first thing you're looking at when you look at a stock? She's going to say, I look at the TAM, the total addressable market. What is the market opportunity? And she's not wrong. Look at Amazon, look at Google, look at all these companies. And they got big because they started with the TAM. Now, ARC got ahead of itself, as did a lot of the companies. But I think these two, if you wanted to figure out an index-based way where you took out some of the stock-specific risk to be able to play echo trades, I'd say XBI and ARC are two great ways to do that.
Yeah, and XBI, another similarity is it didn't really participate in 2023 when everything else was snapping back. It had a really, really janky recovery right there. And
we say that, but it was up 50% from the bottom.
It was down so much though, and then it started going higher. And I'll pull up the chart. It started going higher earlier this year, and then got smacked back down again too.
Yeah, so, yeah. I mean, it looks that way. The same thing I had with when I was looking at the chart of Carvana the other day. I was like, oh, wow, it didn't do that much in 2023 because now it's at 250. And then I was like, oh, wait, it went from 5 to 40. Yeah, it was an 8-bagger. Yeah, it just depends. It just depends on your scale. I got to use logarithmic charts, I guess. But
yeah, it feels like these trades, they're going to be the hot tickets headed into the holidays. It's definitely where I'm concentrating, a lot of my firepower, looking for these movers. They can move quick too, and that's why I like them. Obviously, for the option swing trades, plays like Affirm, Square, other ARC names, double-digit moves in a day can really get you going on the right path.
Pull up that block chart again, or did you pull it up for? I don't know if you did. I mean, this is just awesome.
Yeah,
like that's what you want to buy. So, I'll tell you something funny. 2 weeks ago, as we were sitting here right after the election, I was actually a little frustrated trying to find trades. I didn't have a lot. I was just like, I mean, what I had were setups that were a month or two old, and they were still going to work, but they didn't get me excited. I get more excited if I've got a setup I think is going to make me money in 3 weeks. And those are the fresh setups, right? There's three kinds of trades, right? For me, at least. There's the one I put on and it works within 3 weeks. There's the one I put on that works within 3 months, and there's ones that don't work, and usually I'm out after 3 months. That's kind of like the where the averages lie. And I got to tell you, 2 weeks ago, I had nothing. Now I think we've got two groups of great setups, both yours and mine. Your setups, which are these echo trades, that are emerging across the board. And then my setup, Trump just gave us with RFK that we've got, I've actually gotten, we're going to talk about this later, at another point, I got a dozen names that have been set up because it's not just RFK. We've also seen Doge has had a big impact. Okay. You know what Doge is, right?
Yes. Mm-hmm.
Okay. Yeah. I think everyone knows the Department of Government Efficiency. Why don't you pull up here? I'm going to give one of these away.
Yeah.
Okay. Why don't you pull up a company called, let's actually pull up Booz Allen Hamilton.
What's the ticker for Booz? I forget.
BAH.
BAH. That's right.
Boy, Apple, Harry. And I cannot do these. Okay. So let's take a look. We're going to dive in here. Okay. So Booz Allen Hamilton, big time contractor, big time government contracts. I forget. Here, let's actually go to the Google machine. How much of Booz Allen is government? We'll wait for that. I don't use any chat engines for answering questions. So, okay. Oh, hold on. This is, wow. 98% of the revenue for Booz Allen Hamilton comes from the government. Holy S. I didn't realize that. So take a look at this chart. First off, if you get rid of 3 days ago, oh my God, this is a beautiful chart. Look at this thing. Look at the 5. Let's pull up the 5 year. I haven't looked at it yet. Hold on. I mean, the 5 year is gorgeous. I mean, this thing is just beautiful. The stock just exploded positively first. They reported numbers. Let me just look here. I'm going to bet that they spiked on reporting numbers. They reported numbers on October 25th. The stock was up 10%. And I'm going to tell you, and you guys are getting used to hearing me talk, earnings revisions, which is the single best indicator of what a stock's going to do. Again, we have access to it on Bloomberg, and we're going to start sharing this with some of the products that we're rolling out and everything. You guys are going to hear some announcements very, very soon. But Booz, the earnings revisions are just amazing. And we're going to start sharing it on this call too soon. It's incredible. I mean, it's just up and to the right, just like the stock. So here we've got, a company that's been crushing it, beating numbers, growing earnings. Let's just take a look at the earnings growth. Hold on. Again, this is real-time analysis here. Booz just showed up and I hadn't done it. I mean, they've grown earnings double digits every year for 15 years, like clockwork. Okay, you have to go back to 2015, and that was actually when they went public. So that doesn't count. Growing, beating numbers, raising estimates, stock price looks good, and bam, they announce that. Let's just take a step back here. Okay, I want this to sink in. Elon Musk, the richest man in the world, who owns Tesla and SpaceX, and his little buddy Robin Vivek, who's also a smart guy. I actually know Vivek. They're going to create this unofficial body to make recommendations on where to cut in government. And as a result of that, okay, this stock goes from 190, 185 to 140 in 4 days. Okay, let's put that. So that's $45. I just want to do one last thing. Let's do one thing here. 127 million shares outstanding. $5.7 billion of market cap, because I really want this to sink in. Elon Musk and his buddy are running this unofficial government agency. So does that seem rational to you? Is that the kind of move you want to lean into or that you want to fade? I'll tell you what I want to do. I want to buy BAH here. And this is what's happening. And so, look, we could say, well, charts fill gaps, right? That's something for, we talk about, this stock was always going to fill probably this gap from 165 to 185. That's always going to go happen. But then, it filled that gap and then some. It went to 145. Yeah. So, these are the kind of setups that we want to be looking for that we're starting to see emerge.
I understand that could be counterintuitive for a lot of people. They see a stock that falls off a cliff like this and they want to avoid it like the plague. But, everything you're saying makes total sense there. But also, just from a chart perspective, if you take all of that away, you're at a shelf here of where it has reversed many times beforehand. And so if you're a little bit queasy about getting into a trade like this, just know that you're gonna know when you're wrong if you set a stop just below there and it doesn't start moving in your favor. If you're just looking at this for a very short-term play and you want to get out if you're wrong, you're in a great spot because you're not up in the stratosphere at a spot where it needs to correct 10-15% before you're like, okay, well, maybe I need to bail out of this thing. You're going to know immediately if you're on the wrong track here and this thing's going to dive lower on you.
Well, and you bring up a great point because sometimes, this looks like a meme stock here recently, right? Like when you look at this price action, those spikes and those gaps. But when you look at the rest of the price action, it's not a meme stock. It's just a really good stock. Actually, it's just a really great stock. And so to me, these are the kind of setups that we're seeing. And, just use some logic, right? How much do we really think that Elon Musk is worth and Doge is worth $5 billion of market cap on this company? And it's not just this company. Right? I got a whole list of them here that I'm gonna be talking about, not necessarily today, but there's several hundred billions of dollars that have come out. RFK, let's just take the XLV is down. Let's take a look at the XLV here. We're going to have some more fun with the math. The XLV is down. So this is the healthcare select index. Mm-hmm. The XLV from because of the RFK stuff is down 10 points. That's 6.7%. Okay. I gotta have some fun with math here. I love doing these. I love doing these real time. I hope people let me know if you these annoy you, these real time calculations. But what I'm going to do here, S&P 500 market cap is 43 trillion. 43 trillion times 0.14 weighting the XLB. That's $6 trillion, 0.06 times $350 billion of market cap wiped off because Robert F. Kennedy was nominated to be Secretary of Department of Health and Human Services. Again, I'll fade that move. You want to pick your spots, but that's the kind of thing that this is the volatility we're going to see, whether it's this, the positioning around the Ukraine stuff, these cabinet appointments, Trump's just going to get up there and he's just going to say something and you're going to see some stock go down 20-30%. It's a very target rich environment that I think is emerging. Make volatility great again. As Dan said.
We'll definitely get some midnight tweets that we wake up to the next day with that have some interesting market moving information, and that's for sure. I can sense those coming back into play over the next few months. So some other stuff that's been resetting pretty hard. Small caps are doing the thing again where they break out and then move back into range. How are you feeling about a chart like this, another hard reset, filling this big gap? Because this was a huge reaction to the election right here, up almost 6% with a huge gap higher here, and we're just filling this thing. And now it looks like the lows today have caught, and it's pushed into the green right here. Do you think that's enough, or do you think this is going to go down a little more, or it's going to get crazy on us?
I don't care how what kind of like how much it goes down. It's consolidating back to the previous breakout. It's a stair step function. It's a thing of beauty, and I go back to when we were talking a couple months ago, that breakout that happened in July in the small caps was literally, if you look at the standard deviation move from normal on a 1, 2, and 3 day, I think it was actually the 3 and 4 day, was the single highest standard deviation move we've ever seen. And we looked at all the moves above 3 and 4 standard deviations, of which it's like, I think I even wrote in a note, it was a 1 in 464 billion type breakout. That's how low probability it was. And when you look at those kinds of breakouts, 3, 6, 12 months later, it's higher. And, now to me, so what did we just see? Well, we just saw another high standard deviation breakout 3 months later, and then it's consolidating back to the ceiling of the previous breakout.
Very
That's
similar
what's
action, right?
it's what stocks do in accumulation. So, look, I think that the biggest fundamental variable for small caps, in my opinion, is really going to be interest rates. And people have heard me talk about this. For the market, I don't really care about small caps. They make up 6% of total market cap. I've told you the statistic before. The net income of Apple is actually greater than the net income of every single company in the Russell 2000. So what? And by the way, it's also bigger market cap. So Apple economically is a bigger market cap and makes more net income than the entire Russell 2000. So this is just like another stock to me. But I will say this is that the smaller companies, they're more subject to inflation. They're more subject to vulnerable. They're more vulnerable to higher interest rates. They're more vulnerable to macroeconomic. They don't have a ton of cash. And so to the extent that the environment gets better on any of those, it's going to be better for the small caps. So I think ultimately that's what's driving this move. And it's not even about rates going down. It's about rates not going up anymore. And pull up the chart. Can you pull up the chart of the 10-year yields?
Yeah. What?
I don't know on your system how to do that. I know how to do it on Bloomberg.
No.
Put in 10-year government bond.
Here, I'll ask Ian if he knows. 10-year yield ticker on here.
Because we wrote about this last week too, and I want to make a point. Because this has been a topic of conversation. So before you get the chart up, I'll go ahead and make the point. People are freaked out a little bit because the 10-year yield went from 3.5 to 4.5 in a straight line in about a month. And everyone's like, oh gosh, wow, that's a massive move. Well, I got a couple points. It went from 3.5 to 4.5. It didn't go to 14.5. Number two, it's back where it was 3 months ago. And number three, it's actually back at levels it was in 2022. So the movement in interest rates around these levels, the absolute level of interest rates matters. 15 matters, 5 not so much. And then the movement matters. 0 to 5 in 12 months, 18 months, that's a big deal. 4 to 4.8, 4.5 to 3.6. Who really cares? It doesn't really interfere with your business. I mean, there's a lot of people on this call who probably run small businesses or have run small businesses. It doesn't make a big difference. So as long as rates stay in this boundary, for the next year, 2, 3, I think the Russell's going to move higher and go to new highs.
All right. The next request that we have that everybody's asking about is this gold pullback over after these past couple days where we've seen it creep higher off of those recent lows in the 2550s.
Last week we said buy it. I mean, literally, we're on tape. We said 3 weeks ago, I said I'd avoid it like the plague. And last week, my literal words, I think, on the on this show were it'll consolidate between the 50 and 100-day moving average. And as it gets close to the 100-day moving average, you should buy it. Put those averages on. There you go. And now we got a beautiful, nice chart. That 100-day moving average is right around the breakout in August, September. So, look, I think gold's fine. Gold's going to be good. And I think you could accumulate it here if you don't have it. But also know my view. Why buy gold when you could buy Bitcoin? And that's something that we've been pounding. I mean, I want people to understand too. When I push something so hard, I don't have a dog in this hunt. I'm not here to try to sound smart or sound be intellectual about it. I'm here to make people money. And I was looking at Bitcoin and I was just like, this thing's going to scream. And look what it's done. We've gone from 70,000 to 92,000. And by the way, and I said this before, Trump probably put this on steroids. I don't really care. If Kamala won, I think this thing's probably at 80, 85,000. I would let this consolidate here, but I still stick with, I think we see Bitcoin 100,000 by year end. And I'll go with one last part because I came up with it on this call last week and I've been bouncing it off people and they're just like mind blown. If you're ever going to trade Bitcoin, just divide by 1,000. We talked about this last week. And so Bitcoin just went from 70 to 90. Stocks do that all the time. And we don't freak out, do we? I mean, no, Nvidia goes from, whatever, 100 to 140 in 6 days. And people are like, what? It's not a big deal. I think this thing's, 100 or 100,000 by year end. And I think next year, I agree with that 250. I think that's going to happen. And I agree with the million. So, I like gold here. I think gold's a good buy. It's a good thing to have in your portfolio. I think it trades back up. I paradoxically, I don't love Bitcoin as much because it's super extended now.
Yeah.
But I think both of them, the one thing, and I've got a really smart buddy who ran a big hedge fund who just does incredible work, but he's impossible to understand because he's so like wonky. But his big thing is we are going to see elements of inflation, especially in currency. And you want to buy things that benefit from inflation. What are two things that will benefit from inflation? Gold and Bitcoin. There's no doubt about it. So to me, they actually act as if inflation becomes a real problem for the economy, which I don't think it will, but you're going to see these begin to benefit.
Yeah, even if folks if it becomes more top of mind, then I mean it will benefit too. And I'll do you one better. I'll make a wild prediction, and I'm gonna say that Bitcoin gets above 100K by Thanksgiving weekend.
Okay.
And maybe rolls from there.
I bet you it does it on Thanksgiving Day. How about that?
Okay, that's fair.
No, there's a funny thing about Bitcoin because it trades over the weekend.
Yeah.
I think when we're sort of in a speculative mindset, people have fun and they're going to be watching football, eating their turkey. The markets are closed. They're feeling good. We're having a record year in the market. I like your bet. I think it could happen on Thanksgiving Day, as long as the Cowboys lose, then Bitcoin goes to 100,000.
Yeah. Well, you're right, though. I mean, like we're going to have our third plate of food and we'll be sitting around watching football, and then you'll get a Coinbase alert on your phone.
Yeah, hits 97,000. You'll be like, oh, I got to get in.
I got to get in. And there's nothing else open. And so that's where the speculators are going to be flocking to. I mean,
FOMO, YOLO, all of that.
I mean, we know how fast it can move, but also it has consolidated so tightly up here. I mean, I'm actually kind of surprised that we haven't seen a little bit more intraday volatility in Bitcoin. It's behaved really, really well. And it makes me think that it's just such a coiled spring right here, and that 100K is kind of a foregone conclusion at this point.
I read a stat. Let me pull this up. I saved it. This is actually from that guy I was talking about. His name is Keith McCullough. He used to run a big hedge fund for Carlyle. He runs a service called Hedgeye. Let me just pull this up. Give me 1 second. He published something. I think this was over the weekend. Sorry, I put these in my folders here to keep track of. This is going to explain Bitcoin volatility. Oh, maybe I didn't keep it. But he wrote basically that I think it was either 15 or 20% of Bitcoin is now owned by institutions. So that's why you're seeing volatility fall. There's one other interesting thing about Bitcoin, and it's actually, and I think this will change eventually, but so far it hasn't. It's absolutely unique that as an asset, if you look at when Bitcoin's gotten crazy RSI above 80, it's 1 month and 3 month and 6 month are almost always higher. That's so anything else, but if you go, this is where Bitcoin stair steps. Go back to 2012, and you don't have the RSIs and all that on there. But if you go, Bitcoin stair steps, and so I think that we're at. And obviously, there was the mini winter 2022, but you kind of get up there, you get extended, and then you kind of stair step. If you pull the charts out, if you really go through 23, 24, you just see it over and over. You get to an 80 RSI. Actually, do that. Look at the most recent trading period from the end of 2022 to now.
Well, I'm all the way back in 2017 right now during that first big run up, and you can see where it hits 80 right there when Bitcoin's trading around 10,000, and then it rockets all the way up toward 20. So
and the data, like if you pull up, I'm serious about this. Go to December of 2022, and it just friggin' nails it every single time. Back in right
here. That's this
January. So watch this and keep on going. January, it went above. It went from 18 to 21, and 3 months later, it was at 30.
Yep.
In October, it went from 28 to 35. 3 months later, it was at 40, 50. And then it had another breakout. It went from 50 to 70. Now that one consolidated more longer, but it's trading very differently. And so I think it's very interesting. I'd say this: if someone's asking about silver, pull up the chart of silver. I honestly believe we're seeing a sea change now in how investors are thinking about the deficit, how investors are thinking about inflation, the printing of money. I think it's entered into just the same way that Bitcoin wasn't part of the public conversation, public discourse 5 years ago, and now it is. I think this is now entering into the public discourse. I'm going to say something where I'm a little bit different than Jim Rickards. I don't know that it really is going to make any difference in fiscal or monetary policy. I don't think we could be decades away from that still, in my opinion, but it's certainly part of the conversation. So what I would say is, investors and traders should have a portion of their portfolio, perhaps a very nice portion, in a mixture of gold, silver, and Bitcoin. Okay. Silver is a perfect example, and you can trade around these too. Silver is a perfect example of a consolidation that's even more viable. Gold and silver are viable here. I wouldn't put to Bitcoin. But I'll say this: the one difference between them all, this is all I'm going to tell you. I pulled up a chart yesterday. I got an intern working with me, and we were talking about this stuff. I pulled up a chart of money supply, M2. Okay. Yeah. As the broadest measure. I went back to when Bitcoin was created. There was 80 trillion of M2. Guess where M2 is today? 250 trillion. Okay. Gold supply has actually grown 50% during that period. Bitcoin has grown a lot since that period because that was the beginning. But from here, I'm going to tell you, M2 is going to go up another 300%. Gold's going to go up another 50. Bitcoin's going to go up 7. That's actually math. So I think this can play in people's investment portfolios, can play a really interesting role and can be some ballast.
Yeah, I feel too that we're just at the beginning of the silver trade starting to work again, because we weren't in an environment where anybody cared about it for so long. It was a decade where no one was talking about silver, and we finally get gold moving in the right direction now. And it's been kind of a start and stop process, but I feel like we're finally at the point where you can start speculating on the miners again. You can start speculating on silver again, and all those things are going to start moving along with gold and actually create the better shorter term trading opportunities.
Can you pull up the 20-year on silver?
Yeah, absolutely.
It's a decade-long echo trade. But that's not an accident, right? Like that's why the echo trade is so powerful. It fundamentally speaks to how markets work, how psychology works, how economic opportunity works, right? When silver was at $50 in 2011, that wasn't a fake move. There were reasons why it was there. And those reasons didn't go away. In fact, they got stronger in the last 15 years. And now that's why silver goes back to 50. So do we want to take some of the questions from the board here?
Yeah, there was one question earlier, a ticker that someone wanted to review. I think it was David, wanted me to talk about Root. He posted it in chat earlier. This thing has gone straight up since earnings. Big earnings reaction up 70%, and it feels like it's pushing higher every single day here. I know we've mentioned this before. I really haven't looked into this company too closely, but this is another one of those plays where, I guess it's echo trade-esque right here, but we have a potential IPO here in 2020 where it went straight down. It was trading, and I don't know if it doesn't seem to be split adjusted. Wow. It was trading the 400s and was all the way down to $4. So I'd say it was chopped up. And then we're in a situation this year where we have these huge earnings run-ups. This one back here in February of 2024, going from $9 all the way up to 80, where it's been consolidated. And then we have this other earnings breakout following, looks like it released earnings on Halloween here, and it's just been going straight up ever since. This is a pretty wild chart to me. And this is a small company too, $1.5 billion market cap. Any big thoughts on this one?
Yeah, look, I don't know the company. But I'll share with people how I look at things very quickly. from a price perspective, you're not wrong about an echo trade. But I'll say that the echo trades that we like the most are big liquid companies that make money that have scale.
Yeah.
And Square is a perfect example. Someone mentioned Twilio, Patrick Wiley mentioned Twilio on the board. Those are things where I have 50, 100% upside, maybe 300, 400. And I'm not worried about them going away. Okay. This company is a $1.5 billion market cap, and I'm pulling up their earnings, and they lose a lot of money. Okay. It's just they lost a $500 million in 21, 185 billion in 22. I'm using EBITDA, 50 million last year. And this year they're actually making money on an EBITDA basis. So they're making a lot of progress. So, my first take is I just prefer to play with more stable raw material. But I'd want to dig in because clearly something's going on here. Clearly the company avoided going bankrupt,
right?
Carvana style. Yep. Clearly the company's making progress. From a technical perspective, I'd be very cautious. Remember the rule that you put, you took my rule and put it in one of your things. If a stock, and actually this is really important. People get this tattooed on you. Okay, I got a lot of tattoos, so it's easy for me to say, right? So, if a stock doubles in a day, a week, or a month, sell some, take profits 99% of the time. And especially if there's not like game-changing news. And if a stock doubles in a year or two, you should probably be adding some. But, I'll put this on a TBD. I'll do a little bit of digging. But my first instinct, I'm just a little cautious because it doesn't make money. It's a small company. It's got an RSI of a gajillion. But, it looks like they're going in the right direction. So we'll come back to you on Root.
Yeah, clearly, I mean, it's pushing the right buttons short term, and it definitely screams to me too that this is like one where if I was involved in something like this, I would definitely want to take some money off the table to sleep. Maybe leave a little trailer out there.
Look, if you owned it, let's actually here's some quick math for you. This thing has a huge base at 40. There's anyone who bought it prior to November for the previous 3 months probably owned it at 40. It just went to 80. Sell 55% of what you own. That means you lock in a 10% gain, and then you let the rest ride.
Yep.
That's a really, and so what I tell you about this strategy, okay, I'm going to tell you the funniest thing about this strategy. What I just told you is the most important bear market strategy you will ever have. Now, you might be like, what? Bear market strategy? What are you talking about? We're in the middle of a bull market. It's a bear market strategy because you pulled out your capital, and let's say the bear starts in 3-6 months. I don't know when it's going to start. You can sit there and be like, well, I booked 55%. I booked a 10% gain on my original capital. And if the rest of this goes to zero, yeah, that'll suck. But like I made that money and I booked it. The other thing it does is it puts you in a position to buy. Because if you're just holding on to this stock, let's say you bought some at 40 and you bought some at 60 and it's at 100 and it trades to 60. Are you going to buy it again? Even if it's the best story ever, I mean, bet most people aren't. They're more likely to sell. And so taking profits is one of the most powerful, if not the most powerful, risk management tool you can have.
Yeah, definitely. You mentioned Twilio as an echo boom here. I haven't looked at this one up. Yeah, that's
it's a thing of beauty. And what's really interesting to me about the software, the SaaS space, is, I mean, it's just prototype for the echo trades. Great business model, huge visibility, great gross margins, massive cash flow. But what happened back in 21, these all started trading towards 100 times sales, and they weren't even profitable yet.
Right.
But now it's 3 years later, and lo and behold, Twilio, let's go to the tape here. Blow your mind. Twilio trades at 25 times earnings. That's it.
Yeah.
25 times earnings. That's yeah. Kind of. If
well, compared to what it was in 21.
yeah. Well, so let's do that. Well, back in 21, let's just do sales. Back in 21, they were losing money. This is amazing. They were losing a quarter in 21, lost 15 cents in 22, made 250 in 23. They're going to make $4 this year. Wow, I don't even know what the hell they do. It's pretty impressive. But here, let me do this for you. Let's just go back in 21. They did 3 billion of revenue, 2.84, and the market cap of the stock, 150 million shares. We'll just say the shares are basically the same. I know they probably issued some, but at 450, 150 times, 67 billion, and divide by 2.8. 67, 2.8 divided by, was trading at 23 times sales. Today, the company trades at 3 times sales.
Man.
Wow. Wow. But so here's the thing, poor Twilio, they didn't do anything. They just built an awesome company that kicks ass and just went about kicking ass. But this is what the stock market is. This is the power of the echo trades. You got to find the right ones. You got to find the names, because it's just, I talk the concept of potential. Look, we started this call talking about potential in the short-term trading. That's about, if we're very overbought or we're very oversold, that creates the potential for a reversion to the mean, or just to unwind that. Too many people are on one side of the boat. It causes the boat to rock, and eventually it bounces out. It's a huge thing to understand in trading, but it can also be an incredible thing, potential in investing, because you're seeing with these echo trades, these companies, the story of silver from a decade ago is true today. The story of Twilio from 4 years ago is true today. We're just seeing these things come to fruition. And as we enter into the middle of a bull market, okay, this is the heart of a bull market. Just pull Trump out of us and all that stuff. What you're going to see, this is when these trades begin to stretch their legs. This is what I saw in 2002, 2003. This is what I saw in 2010, 2011, 2012. And I think that we're sitting on top of dozens and dozens of these names that can make 100, 200, 300% and have incredibly attractive and asymmetrical risk rewards.
Yeah, absolutely. And I mean, just the fact that there's like other charts out there that look like this, they're more than a handful that we can grab onto in this market is pretty incredible. And this is, I mean, I feel like beating a dead horse here, but this is the stuff that I'm watching closely for, even momentum plays and everything heading into the end of the year. I think they're great on multiple time frames. They're great longer term holds, and they also offer these great shorter term trading opportunities. Between this and anything crypto related, that's where my full attention is here heading into the holiday season. Let's do another couple quick chart requests. I know earlier I saw LRCX. And I think this one's been in the news recently. I haven't looked at the chart, but let's pull it up. Here we have, this is a semi, right? Some sort of semiconductor, possibly.
Yeah, I think it's one of the semiconductor equipment. I mean, look, the semis are a tale actually of 3 cities. The semis are like New York State right now, right? You got Manhattan, which is NVIDIA. You got a couple other companies that are sort of like Syracuse, Albany, and then you got a bunch of little small towns, right? And so I think, but I say that for a reason, because what's happening in Manhattan is not necessarily what's happening in Buffalo, and it's certainly not what's happening in what's the place across the way from me, over across in Sleepy Hollow, let's say, or something like that. So I'll tell you though, I'm still constructive on the semis. I think that, all of these, whether it's this, whether it's, what was the other? I mean, you've seen some difficult numbers out of ASML. AMAT had some choppy numbers. The problem is you got PCs and mobile in there along with AI. I still would be more constructive than not, but clearly, I'll say this, clearly the chart's not saying to buy it at this point. We have broken this chart. When you're that far below the whatchamacallit, the 200 day, to me, we've gone from a good chart to not a good chart.
Yeah,
at this point. So I'd probably say from a technical and trading perspective, I'd say a push. Wait for something that looks better. Wait for something that looks like this, not something that looks like this. Sorry,
that's a bigger drop than it looks. I mean, this was hitting a high of 112 back in July. And it's down in the 60s now.
Yeah,
That,
Lamb's probably a better buy at 92 than it is here.
yeah. What other ones do we have that came up? IWM, we talked about small caps. LHV, I don't know this one. I'm getting some tickers that I'm not familiar with here. Let's pull this up and see what the heck we're looking at.
LHV.
I've never heard of this stock, but it is. You said you wanted charts to look like this. Am I doing that right or am I backwards? Is this right? So yeah,
Excels. What's the ticker here?
LHV, Excel Service Holdings. Never heard of it.
I'm saying I have a different ticker for that, but I think
Oh no,
the same. Yeah, I don't know why that is. I pull it up as EXLS. Look, it's a rocket ship, right? You know,
no.
what do they do? Rockets? I don't know. I wouldn't buy
Data
this
process.
chart. Like, I mean, unless they just cured cancer, I'd stay away and wait for it to consolidate back to 40. I mean, that's just purely, it's literally looking at the chart, not knowing a single thing about it. Offshore business process outsourcing solutions, global companies. I mean, it sounds very James Bondy.
Yeah. Here's AVAV, AeroVironment. I haven't heard these are. I haven't heard of these. This is another one that's foreign to me, right?
I think the people on the broadcast today have been on the chat boards on stock twits pulling these up. No, but they're all stocks that have done real well. Yeah, I mean, look, this one's consolidating. You know, sort of filling those gaps. You've been around this 175, coming back to the 200-day. I just, you know, let's end with this. Is I think you can make a lot of money in $1, $2, $3, $5 billion stocks that have gone up a ton, but it's if you're buying them after they've gone up a lot is a much trickier strategy, and that strategy works a lot better for more established assets and companies like Bitcoin, like silver, like Twilio. You know, I just would be very careful when you get down anything below 10 billion. You know, and I'll leave this one lesson for you. Actually, this is a crazy lesson. If I never in my entire career had bought a stock below a $10 billion market cap, we'll actually say 5 billion because the world's grown a lot, below a $5 billion market cap, my performance as a trader and investor probably would have been double or triple, and I wouldn't have as much gray in my beard at all, and I'd have more hair. Like, you know, it just but this it's true, right? We're trading technicals, we're trading fundamentals. Having a company with that kind of market cap means the ground is solid underneath you, right? And then the rules of the game work better. Physics work better when you're running on solid ground. Physics don't work so well when you're running on something with a bunch of potholes or it's muddy, you know, and that's what trading $1 billion market cap. So people don't have to do it. People make a lot of money in microcaps. I get it. But I'm just telling you, me personally, if I never traded below, you know, a $5 billion market cap, I would have done a hell of a lot better. And that's why almost everything that we recommend or we talk about is above 5 billion. It's just this just one little thing save you a lot of headaches.
Yeah, for sure. Well, let's end on that. My focus, like I said, you know, many times during this call, I'm looking at the big growth bases. I'm concentrated on crypto. I feel like that's where the momentum is, and that's where it's going to be in the weeks ahead for these shorter term trades. We are off next week for Thanksgiving. So next time I talk to you, Enrique, we'll be able to talk about our Bitcoin bet, which we agree on. So I guess it's not really that much of a bet. But hopefully we'll be here talking about how high Bitcoin's going to be going and what it's going to do now that it's hit 100K.
And just remember, I think I published this the other day. Look, when the market's up this much through this time of year, you know, you've got a 90% chance it's going to be higher through the rest of the year. It's been up on average 3%. Just take your time. There's going to be, wait for your setups. Don't chase, because you're going to get beautiful setups. We talked about BAH today. And, you know, be patient. I think you can make some really nice money between now and year end.
Excellent. Well, I hope you have a great Thanksgiving, and we'll be back the week after, the Tuesday after, to talk about all this stuff. And the